Hi everyone, this is Jason Burek of Wall Street for Main Street, and this is your video blog for Thursday, September 9th, 2010, NFL's opening night. Yesterday on CNBC, they talked about how the Japanese yen is reaching a 15-year high against the US dollar and a 9-year high against the euro. And while it looks like the dollar has strengthened a little bit today and commodity prices are falling, this is another tremendous problem for Japan. My question is the Bank of Japan, or the BOJ, are they out of bullets? Can they stimulate further? Can they continue to devalue the yen? Or is this Keynesian experiment just about run its course? Let me give you an explanation of all the stuff that Japan's been going through for the last 2 decades. Back around 1990, Japan's real estate and stock markets both collapsed. And since then, they've continued to lose greater than 75% of their value. And the banks had invested very, very heavily in the property markets all over the world, but particularly in Japan. And the Bank of Japan, which is beholden to the banks more than the people of Japan, tried to save the banks, trying to do a lot what we do now. So what happened then is they continued to devalue the currency to fight deflation. And while that hasn't been very successful, they've really just been stagflating instead. So while assets continue to deflate, the cost of living, the CPI, which they've hidden, the purchasing power of Japanese yen, of Japanese people money, continues to go down. So the standard of living in Japan is going down. Also, the Japanese savings rate, which for a long time used to be known as very, very high, some of the highest in the world, over 20%, it has dropped humongously. So that is a warning sign there too. Instead, when the Bank of Japan, when they printed all of these JGBs, or Japanese government bonds initially, to try and weaken the yen, to try and fight deflation, the Japanese citizens, who really didn't like the policy, bought the bonds anyway out of support for their government. But this is part of the problem, that the government did a lot of work projects and they wasted a lot of the money. There was over $60 billion spent on a robot industry that had no demand outside of Japan. So Japan is the leader in robots and has all these fancy robots, but they can't sell them really to anyone outside of Japan. So it's a phony market, it's malinvestment, it's a waste of money. Now they have done some useful projects. They did concrete off some rivers to prevent some flooding for when they get really bad rains. But there's been a lot of misuse of capital, folks. The bottom line here, in my humble opinion, is that I think Japan is running out of bullets. And I think if they do try another very, very large stimulus package here, like over $1 trillion worth, to try and devalue the yen against the dollar or the euro, it could backfire. Now, the Japanese, they do have a lot of positive things going for it, but that savings rate dropping among the Japanese people is very, very dangerous. The standard of living is going down tremendously in Japan. The prices on things are going a lot higher. It is very expensive to live in Tokyo and other Japanese cities, a very, very high cost of living. And some of the positive things that Japan is going for it that might be able to help them get out of this, or have been able for Japan to continue doing this Keynesian experiment of deficit spending and continuing to devalue their currency for a few decades now, has been the fact that Japanese companies are such great exporters. Japan runs a trade surplus, so that's a good thing. But the question is now is who's going to buy those JGBs, those Japanese government bonds? Is the Bank of Japan going to have to monetize those? Now, I know a lot of mixed model market economists and Keynesians and neo-Keynesians will say it doesn't matter who buys those JGBs. It really doesn't. Well, I disagree. And I think that the Japanese people, their savings rates are diminished. They've bought investments that have not been producing a return. When you buy an investment for that long, you want to have like dividend income or high yielding income, and they're getting nothing from buying those JGBs. They have condoned bad behavior, folks. They need to. The Japanese citizens, I've heard them on TV, on Bloomberg, come on in interviews and just complain about their government and the policy, and yet they're still buying JGBs. Why? do not condone bad behavior. Otherwise, the Japanese government is just going to continue to bail out the banks, and only the banks and the large corporations are going to be saved, and the government. So the Japanese citizens, I'm truly worried about. They have a demographics problem. This is getting very ugly in Japan. They might not be the first country to collapse, but it looks like they're going to collapse too, folks, and it's not going to be pretty. So everyone have a great week. Metals have dropped a little bit. It looks like commodities are dropping a little bit. Dollar strengthening. No big deal. Still long-term philosophy. If you want to hedge your portfolio a little bit, you need to learn a little options. Maybe you can sell some covered calls here in your long positions. Or if you're really worried, you can buy some put insurance. You can buy put on your long position on your stocks if they're large caps or medium caps, and they trade on the New York Stock Exchange, NASDAQ, or Amex. Everyone have a great week, and I hope you got something useful out of this Japan thing. But I think this Japanese experiment is running its course, and I don't think the U.S. can be Japan. I don't think we can do this for a few decades where we just continue to do stimulus packages and stagflate. I don't think so, because the U.S. is the largest debtor nation in the world. We're not a creditor nation like Japan, or like what we were in the 1970s when Paul Volcker raised interest rates. So you can, if you disagree with me, feel free to comment on the Wall Street for Main Street Facebook fan page or on our YouTube channel. Everyone have a great week, and I am out.